Welcome to Business Talk on Business Tech with me, Michael Avery, and today we're talking all about digital currencies, and they've exploded in value during the COVID pandemic, but hurdles to widespread adoption do remain. And while the air has come out of the recent rally, the forces underpinning the digital currency boom remain in place. And I think blockchain technology is really interesting and will almost certainly become more important in the future. And I think I understand the finite supply of Bitcoin or other cryptocurrencies and the loss of faith in central banks and this whole store of value narrative. But I have absolutely no idea how to value Bitcoin or Ether or any of these cryptocurrencies. It could be cheap at $1 million and it could be expensive at $5. And I wouldn't be able to put forward a coherent reason why. So to talk about cryptos and to help us understand how you value them and what are the drivers from Bitcoin to Dogecoin, I'm really looking forward to speaking to my next guest today, Sean Sanders, CEO and founder of Revix, which is one of the top exchanges, one of the top fintech firms that's recently raised a big whack of money offshore. Sean, great to have you on the show. Firstly, what does Revix do?
Hey, Michael, thanks very much for having me. So in a nutshell, Revix is slightly different to the other crypto investment platforms out there in that we focus on providing crypto bundles. So a bundle is sort of like the S&P 500 or JSE Top 40 equivalent in the crypto space. So it's not a fund, you actually directly buy the underlying cryptocurrencies, but you're getting diversified low-cost exposure to the cryptocurrency asset class. So our premise and our thesis really is to say we cannot guess which cryptocurrencies are going to become the big success stories of tomorrow. I mean, Bitcoin has had one hell of a rally. You've had Ethereum, Cardano, Polkadot, all these other cryptocurrencies sort of grow in value over the last years. In the case of Cardano, you're looking over 1,000% return. And we think in the future, you are going to get sort of these new up and coming cryptocurrencies that are going to outperform some of the bigger names that we know today. And to get exposure to them is sort of the main crux of what our bundles are looking to achieve. So that's our main focus. I mean, we do offer individual cryptocurrencies as well. So you can buy Bitcoin, you can buy Ethereum. We have got a dollar-backed stable coin on our platform as well. But our main sort of selling point are these bundles.
I can liken it almost to the ETFs of the crypto world. Very dangerous to compare, I think, stocks to cryptocurrencies because they've different narratives. Cryptos don't have an underlying cash flow; they're stores of value. But I think the bundle reminds me of an ETF. Now, the Revix story is an interesting story as well. Just tell me about how you came to found Revix. I think it was back in 2015.
So I first got involved with crypto back in 2015, and I actually formed another business, which was essentially looking at providing a Bitcoin investment vehicle, a fund, a very traditional fund, to high net worth individuals. So my background, I come from the investing world. I worked at a specialty investment group for a while. I worked at a hedge fund for a short while. Also worked at a family office for a while before then working at a venture capital firm. So finance. And I was sort of well positioned because I was dealing with high net worth individuals that wanted exposure to alternative investments to then form this cryptocurrency fund. Now, this was back in 2015. Now, I can tell you, you talk about Bitcoin in 2015 and the regulators are like, okay, please just shoo, like, come on, like, let's stop talking about this monopoly internet money stuff. Yeah. And back then it was really difficult to form a fund and there wasn't any regulation anywhere really. So it was really a different story. I mean, custodying cryptocurrencies was a lot more difficult. So forming that fund and raising capital and all the rest was a lot more difficult, but it did give me the opportunity to really see the idea around launching a product that provides diversified exposure to this novel asset class. And we essentially took that same idea that we had with the cryptocurrency fund called Blocktree Capital, and we applied it to Revix. So we said, listen, how can we give people the best opportunity to invest in this investment space? And that's where we formed Revix. So Revix was formed in 2019. We spent a bit of time building the platform. Naturally building an investment platform, so you have to spend time on, security checks, something called a penetration test. And we've managed to raise a fair amount of money since then to sort of expand internationally and to grow our footprint in South Africa. And it's been one hell of a journey. Certainly one of the best journeys of my entire life, if not the best journey. And we continue to serve customers every day. So we have over 20,000 customers in South Africa.
Wow, that is rapid growth since 2019, parabolic, much like the rise of cryptocurrencies as well. We have seen, though, on the other side of the crypto mania, in inverted commas, A lot of the air come out of the recent rally, all the way up to $60,000, currently hovering around, if you look at the Bitcoin price, $30,000. Michael Burry of Big Short fame saying there's lots of leverage in the crypto market, and he's worried that there could be a crash. Where you can leverage like 1 to 100. Some unscrupulous exchanges are allowing retail investors to do that. Now, that's clearly irresponsible. What is your take on the leverage involved in the market at the moment, and generally where we find ourselves in that crypto cycle?
So you've definitely seen the big run up in prices, and the air has come out of the market, as you've said. This is nothing new. I mean, since I've been involved in crypto since 2015, you've seen this a few times. 2017 was sort of the big example before, and it's just sort of part of this bull bear cycle. I mean, crypto goes through these cycles, right? You get a lot of interest, and then it seems like people just get all scared, they move out of the market, and you seem to just have greater developments in the underlying technology. But if you're looking at leverage in particular, so this is one of those things that people don't talk enough about, because there is a lot of leverage in the crypto space. Now, for an average retail investor, I mean, I worked as a professional trader for a while. I know as a professional trader, playing around with leverage is dangerous. Unless you've got very strict mandates and rules in place, you can get really badly burnt. And for the average retail investor, my best advice, and this, I can't provide financial advice, but my best advice is to stay clear of any leveraged trading platform, especially around crypto. I mean, potentially look at some other investment categories that are less volatile, but with crypto, I mean, you are able to experience a 10 to 15% move in a single day. Now, something that a lot of people don't understand is that when you have a lot of leverage in the crypto market, like what you do today, that means that when a big move happens up or down, a whole bunch of people get forcefully closed out of their position, and they get forced either into buying into the market or selling into the market in order to close either their long or short position. I don't want to get into too much jargon around that, but that actually exacerbates the move in either direction. So that causes more volatility in the market. So, people think, okay, well, the crypto market, it's just a volatile market. No, the reason it's so volatile is that so many people are trading it, so many people are taking leverage. So when you enter the space, you actually do need to understand your own risk profile. So how much could you be willing to lose? And saying, well, okay, in our opinion, we're saying invest over the long term. Don't try invest over the short term. Rather go to the casino if you're looking for a gamble.
Yeah, and I think it's really good. While we can't give advice here, I mean, it really is a good insight into the mechanics of the market, because if you don't know that, if you're not aware of that, you may see that volatility as a sign of the immaturity of the market, or it being a little bit too risky for you, not really understand what's going on over the long term, which is really the fundamental underpin here. And I mentioned it earlier on this kind of store of value narrative, the fact that we've seen the printing presses go into overdrive around the world. I mean, the money supply in the US up 25% last year. We've never seen this in history. And the narrative really goes that fiat currencies just ultimately cannot sustain this level of money printing, of debt incurring by sovereign states. And so something that is effectively backed by the blockchain, that is finite, such as a cryptocurrency, is a better bet in terms of a longer store of value. Do you buy into that? What do you see as the fundamental driver of value around cryptocurrencies at the moment?
So I think it's really important to outline that cryptocurrencies is a bit of a misnomer. It's actually it should be better to call them crypto assets, because different cryptocurrencies do different things. Bitcoin acts a little bit like digital gold, in my opinion. So there's a finite supply of 21 million Bitcoin. There's a known inflation rate. So currently you've got about a 1.8% inflation rate with Bitcoin every single year. That's a little less than gold, which is around 2.1%. Inflation rate being how many new Bitcoin are being created on a yearly basis. And the idea around Bitcoin is quite simple, really. In the long term, are you going to see more demand than supply? And that's going to determine whether the prices go up or down. Now, if you're looking at the amount of money in society that we have today, and obviously how the printing presses have been going crazy for the last year, there's so much debt that's been introduced into the system. I mean, it's almost undeniable that this is going to have a big financial impact in one way or another, right? And are you going to see dollars become more valuable or less valuable? Now, if you've increased the number of dollars in circulation, but you haven't increased the number of physical things or intangible things by that same amount, then of course the dollar becomes less valuable. $1 becomes less valuable per real world good. Now I don't think that's really something that's up for debate. Of course, that's going to be the case. It's just a win. And at this point in time, I mean, we're only sitting here, a good 18 months, 19 months since the start of the whole COVID crisis, that's not a lot of time. When time gets to, or when maybe 2 years or 2.5 years or 3 years has passed, and all of a sudden you've got inflation creeping up, and we're starting to see this today. But when that inflation starts creeping up, that's when people are going to start getting worried. Because what at the end of the day is inflation? Inflation is the price of everyday goods and services becoming more expensive year over year. Now, the kind of inverse of that, but sort of just looking at it from a different lens, is actually the price of everyday goods becoming more expensive, or the dollar becoming less valuable, right? So, or that rand becoming less valuable. And it's not the fact that, like, the movie that you're going to go see, or the milk that you're buying, or the mouse that you're buying for your computer, those don't become more expensive. I mean, not in real terms. They become more expensive in that the currency becomes worth less. And over the long term, the big risk here is that that currency becomes worthless. I mean, sorry, that's a little bit tongue in cheek, but you understand where I'm going with that. So, in my opinion, I think there's a really good long-term case for Bitcoin to be like a digital gold.
Yeah.
And if you're looking at a younger investor today that is more digitally savvy, they're probably going to be choosing Bitcoin over physical gold. Again, that's just my opinion. The likes of Ethereum, Cardano, Polkadot, I mean, there's so many other cryptocurrencies out there. They're looking at doing things completely differently. They're looking at sort of implementing blockchain infrastructure that allows other applications to run on top of them. That's very different. And the whole entire narrative and sort of the fundamental use case behind them is very different to that of Bitcoin. And I mean, we don't have enough time to really talk about all of that today. But yeah, I
We
think
should start a
the space is
series.
going to get bigger.
We should start a series. There's so much to talk about, and we could spend the next 30 minutes just talking about Cardano as well. But staying on Bitcoin, I know that the bulls point out that Bitcoin only really accounts for around, I think, 4 or 5% of gold's $9 trillion market cap. And that just feels like the wrong number. And I'm sure that'll push up north over time. And so, again, that's fully supportive of getting involved and getting invested. So what do I need to do to invest with the Revix?
Sure. So it's really easy to get started with Revix. We make the entire process from start to finish as effortless as possible. That's really our goal. That's why we exist. So you would sign up for an account at www.revix.com. That should take you no longer than 2 minutes. Once you've signed up for an account, we need to fee you. Again, you just need to have a proof of address, have your passport or your ID document on you. That, again, shouldn't take too long. It can happen in as quick as an hour. Once that's completed, you need to make a bank payment to us. You can get started with us for as little as 150 Rand, and you make that deposit, and then you pick which investments you want to get started in. So you can pick one of our bundles, so which are those diversified investment products we spoke about. You can invest in Bitcoin, you can invest in Ethereum. We've also got a gold-backed token, which is a crypto commodity. So this is a physical gold bar that has been broken up into 400 different tokens, and we're able to offer them on our platform, which is quite interesting, and that's called Paxos Gold. We've also got a dollar-backed stablecoin called USDC that is offered on our platform, and really you can pick whatever you want to invest in, and there's no lockup periods or anything like that. The moment you make an investment, you can choose to sell, or you can wait 2, 3, 4, 5 years. So it's entirely up to you. And our customer support team is available 24/7 as well.
In terms of those bundles, I mean, how much flexibility do you just have a set list of, say, this is list 10 of various cryptos that we put together, because there are many out there. How much flexibility is in the actual bundle itself?
So not that much flexibility. We, again, are trying to focus on making the entire investing experience really simple.
Yeah.
So for 99% of the customers that kind of use the Revix platform, they want to get diversified exposure to the crypto asset class. So they want to say, listen, when the crypto market increases, I want to make sure that my investment increases. And if you're looking at our bundle, our top 10 bundle, it's an equally weighted bundle. And that means that you own the same amount of Bitcoin as you own of Ethereum, as you own of all the other top 10 cryptocurrencies. Now, that's really important because there's other products in the market that provide market-weighted exposure, meaning you're getting the amount of exposure based on the size of the total cryptocurrency's value. Now, if you look at a market-weighted bundle, go buy Bitcoin and Ethereum yourself. Like, it's you're sitting with about 88% of your holdings sitting in just Bitcoin and Ethereum. Now, that's not diversified investing. Like, go do, and you can do that yourself, right? Two cryptocurrencies aren't difficult to purchase. So if you want an equally weighted portfolio, that's really where we come in. We're saying, listen, you're going to have this diversified portfolio. And what's really great is we have an algorithm. Now, this isn't one of those dodgy MTI-like algorithms that are going to outperform the market. No, we have an algorithm that runs every single month. And all this algorithm is meant to do is to say, listen, you Michael, you need to own the top 10 largest cryptocurrencies. So if, let's say, in a given month, the 10th largest cryptocurrency declines in value, and there's another cryptocurrency that then moves into the top 10, that algorithm automatically swaps those around and sort of updates your portfolio so that you stay up to date with the evolving crypto market.
So it's like having your own asset manager, ensuring that you're rebalancing. And that's done monthly, right?
Every single month, yes.
Right. Now, I mean, you mentioned MTI, and there have been a few other sort of scandals out there, and I think people are worried about what happens to my money. I've signed up, I've verified my account, I've done all my FICA, invested in one of the bundles. Do I keep it in my wallet or my bank account? Does Revix keep it? What happens to my cash?
So this is probably like the biggest area that regulators should be focusing on, because if you look at most of the failed crypto exchanges, platforms, you name it, the kind of custody, as they call it, of cryptocurrencies has just been exceptionally poor. I mean, a lot of exchanges, I know this globally, they literally are keeping their customer assets on one of those flash drive. I can actually pull it up for you right now on one of these like devices. Now, if your customer assets, if Revix's customer assets were held on one of these devices, that's a massive risk, right? Somebody could walk into this office and they could take the assets and that would be the end of it, right? And that's what's happened to other exchanges. Now, you have to use professional custody partners the same way as a bank would utilize, professional custodian partner. And that's exactly what we do at Revix. So we make use of two of the biggest partners in the world to custody crypto assets. And there's also this question that a lot of people have where they say, listen, if Revix or the platform that I'm using fails, what does that mean for my cryptocurrency? So what you need to have, and this is something that's important if you're reaching out to any platform or you're utilizing any platform, is to make sure that they are using a separate trust account. So your customer funds that are deposited aren't being deposited into Revix's bank account, but rather Revix's trust account that then is, essentially custodied on your behalf as the customer.
No, I think that is vital, absolutely vital, and great to hear that Revix does it in such such a well considered and prudential manner in an environment where we have seen so many scams. Now we've seen a pullback in the crypto market lately, and I'm thinking this is probably a good time to invest. How do you see the opportunity set in the market at the moment?
I'm such a crypto bull. I'm going to be telling you, like every single time the market pulls back 10%, this is another opportunity to buy in. I would say to most investors out there right now, don't run in and put a huge amount of money into this market. Like that's not my best advice. That's not great advice in my opinion. You never know sort of what can happen. And you could easily see this market pull back a further 10%. As I say that, the market could easily move up another 10%. I don't pretend to have a crystal ball. I don't think anyone can tell you exactly where the market's going to move next. So I think it would be prudent to take this opportunity potentially to say, listen, the market's pulled back substantially. I mean, Bitcoin's about 50%, a little bit more than that actually, off its all-time high. Cool, maybe have a small allocation now. In a month's time, this is known as dollar cost averaging, put a little bit more money in. Because at the end of the day, if you're looking at the long-term trend of crypto, it is a diagonal chart pretty much from the bottom left to the top right. And even that really big 2017 into 18 crash that we saw in crypto, if you go look at that price chart right now, that's just a tiny little blip. And that's the way that we view all of these sort of big pullbacks. If you're thinking about Bitcoin, and let's just stick to Bitcoin in particular, if you're looking at Bitcoin challenging gold's dominance, and I can't wait for the day when you can actually say like Bitcoin's just overtaken gold's total market value, you would be looking at roughly about a 15, 16x return from where Bitcoin is today in order to overtake gold's value. So a 40%, 60%, 50% decline, I mean, it's largely irrelevant if you're looking at sort of that upside opportunity. And that's what brought a lot of people into the crypto space as well, is this asymmetric, it's a really fancy word of just saying this, return profile versus risk profile that's more skewed towards, having some outsized returns. Because at the end of the day, you put in, let's say 10,000 Rand, the most you can lose is 10,000 Rand. If you put in 10,000 Rand and you see the upside potential as being 10x, you make 10 extra money, right? Which is substantially more. So that's sort of what a lot of people are attracted to when they're looking at the crypto space and the longer term opportunity.
Yeah, and diversification. I mean, that really is what every good portfolio should be looking to do, is add more diversification, more uncorrelated assets, and cryptocurrencies, crypto assets certainly tick that box for me. We're seeing a lot more institutional money flowing into these assets as big fund managers, big corporations, Tesla, for example, realizing that this fundamental narrative is very supportive of crypto assets. Sean Sanders, we could spend another 30 minutes talking about this. It's been fascinating taking a tour through the world of crypto with you here on Business Talk and Business Tech. Take care.
Thank you very much, Michael. Have a good day.
That was Sean Sanders, CEO and founder of Revix. You know what to do. Go on and visit Revix now to see whether one of those bundles is the right one for you.